Type 9. Welcome back to the Everyday Growth Advisors webinar series. Good morning, guys. I hope you're having a great morning today. Nice to see all of you here. I appreciate you taking the time out being at this webinar. These are special webinars that I hold to bring even more value to this stream on Tuesdays and Thursdays. So I really hope that you enjoy the content that I put out here. Right before we start today, I want to take a little bit of time to go through a little bit of the markets, give you guys a little update on XOM, which people are freaking out about, and then kind of continue into the webinar. So maybe we'll take about 5 minutes to do a market update and then jump straight in. All right. Good morning, everybody. Thank you for the great engagement here. Also, if you're here, remember all I ask for is to smash the like button. Or lightly tap it. You don't necessarily have to smash it. You can lightly tap it, but just make love to it. That's all. Okay. All right. Let's do a little bit of analysis here. Okay. So what I do see here on the Nasdaq, we've had a really nice uptrend, right? And I know that I've been saying for a while that there will be a pullback, and it's definitely coming. It's when it's going to happen. It's not if it's going to happen. It's just when. Okay. And I mentioned over the past 2 weeks, and I have been mentioning that this key level over here is going to be a battleground for bulls and bears, but the bulls have been dominating so far. Okay. And yesterday I was anticipating a pullback, but guess what happened? The market zipped even higher. Why? The Dow was leading everything, right? The Dow was leading everything. I've been mentioning the Dow at least 15 million times. I've been saying that the Dow has to catch up at some point, okay? And the reason why the Dow has to catch up at some point is because the three indexes usually behave in tandem, all right? They move in cadence. But the Dow was out of sync because tech was what was propelling the market forward during the COVID-19 crisis. Now that we're actually getting news about, oh, we might have a vaccine and this and that and yada, 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 what's happening is that the faith is being restored in industrials and other sectors that form a big part of Dow. Okay, so expect the Dow to rally even further. Now, I said yesterday on the live stream that a break above here and a consolidation on above this little channel would be a good sign, right? For us to do one of these and then this bounce on the channel and then perhaps head up again, right? So that still holds true on the Dow, okay? I still see the Dow possibly going up further here, and it's going to be perfect for our positioning. We have been positioning ourselves for this moment for about 4 weeks now, okay? For 4 weeks, we have been consistently realizing that the Dow is, when we started this procedure, we were here. Remember that, okay? 4 weeks ago, we were here. And we have been slowly accumulating all the positions that make up majority of the Dow and rode this wave up, okay? So now you're positioned. People who are getting in now, it's too late, right? You are now positioned to take advantage of this wave up, okay? People who have followed along with Boeing, people who have followed along with XOM, and I'm going to get to XOM in a second here. So if you've been following along and you've been doing exactly what we've been talking about in the stream, you should be well ahead of everybody right now. Okay, the Nasdaq continues to chug along here in this upward trend, which is nice. But look at how far above we are on these moving averages. Okay, this is a very, very big uptrend here. So the Nasdaq is gonna face some resistance here. I wouldn't be surprised if we see a dip pullback here. Okay, now if the Nasdaq pulls back, everything pulls back. So to that I say, I am comfortable. If you haven't taken any hedges, this is the moment that you should. Today should be the day you should be exiting aggressive bullish positions if you haven't already. Okay, I already started doing that last week, exiting bullish positions. Why? Because, and I'm talking about aggressive bullish positions when you were overweight, right? You don't want to be overweight now. You want to be just cutting your bullish positions, selling them to people who are interested in taking those positions from you, okay? And thinking that the market's going to keep melting up here. It will, but it needs a pullback, okay? It needs a pullback. So that is the natural way of the market. That's how the waves go, and we have to ride the waves, right? Right? Impulsive, corrective. Impulsive. There has to be a corrective wave before we move up again. It could be a short corrective wave. It could be a corrective wave to here, but there has to be a corrective wave, okay? And then when the corrective wave happens, everybody's going to take profit and sell the wave. So you want to get out before that happens. You don't want to wait for it to happen and then get out. It's too late to do that. Remember, you're always buying before people are buying, and you're always selling before people are selling. That's the way you try to get out of it. You don't be greedy. That's the main thing, okay? Don't be greedy. Okay, great. Let's see. Can we get to 100 likes today? I know there's only 89 of you, but I feel like we can, man. I feel like we can. I feel like the more you guys like the stream, the more people will come in. Okay, tickers that I'm going to watch for today. I posted this on Twitter not long ago, about 50 minutes ago. So if you don't follow me on Twitter, please go ahead and follow me. My handle on Twitter is EGA Learn. And so this is what I'm watching today with the help of other watch lists from other traders, kind of just building something to see today. There are a couple of swing plays here, and then there are also continuation plays from yesterday. So yesterday we had a great day. If you have been following me on Twitter, I made some pretty great judgment calls yesterday. So started the day. Well, first of all, we were watching Baba, Facebook, Boeing, and VXX. We didn't end up taking anything in VXX and Baba because I'm actually still waiting to do. Okay, for Baba, I'm still waiting for a pullback. It's far above where I want to buy it. Okay, I don't feel comfortable buying into this rally right now. We don't want to FOMO into this. Okay, we would rather wait for a pullback of some kind and then get in. Okay, so I'm not comfortable with getting Baba at these price levels. So I'm going to skip it entirely. But however, yesterday, right before, when Facebook opened up, I nibbled on a little a long play, and then I got stopped out for these calls and at a small profit, and then I rebought in towards the end of the day, and it's looking good so far. Gonna probably swing that one for a while, and let's see what happens. And then was Boeing, right, which I also posted on Twitter. Boeing looks like it's grabbing some paint here to make a run up. Somehow, I think risk may flow out from NASDAQ and SPY into Dow Jones for the pushback for the cover of ATH. Watch out for this one taking the lead. And true enough, what happened to Boeing yesterday? Let's see. Same chart on the 5-minute. That is pretty much where I called it out, somewhere here, right? And then we saw a huge, insane rally yesterday. So if you don't follow me on Twitter, you probably should, because I give a lot of market commentary when it's happening. And I find it just easier to put everything there. And then I rebought into Facebook there, as I said. And then Boeing was a big winner. So yesterday, just Boeing alone was $1,000. And that was a great play. And everybody was harping over Tesla and Apple. And honestly, I didn't understand that. Then we took a little snipe on Zoom yesterday because it was exhibiting bearishness. So we sniped Zoom for puts, and that's it. Okay, so today I'll continually post chart updates of what I see and any other things that I see going on. That kind of concludes my market update. So I hope you guys enjoyed that one. Thank you for being here, taking your time out, and I'll start the webinar right now. Okay, so the basis of a swing trade, first of all, and this is something that I like to think that my strong suit is swing trades, okay? The first thing that you are concentrating on in a swing trade. Why is it called a swing trade? Okay, the basis of a swing trade, you're looking for a swing high to a swing low, okay? And what does that mean? You're looking to either a support or to a resistance, or you're looking to a resistance or a support. It could be either or, okay? You're swinging from either a top down or a bottom up. That is what we call a swing trade, okay? Now, there are a couple of things that you need to know. The first thing is swing trades are usually done on a longer time frame, okay? However, sometimes traders turn a day trade into a swing trade. And hence, they say, I'm going to swing this into the next day. Okay? That's why the terminology is used. I'm going to swing my day trade into the next day, so it becomes a swing trade. Okay? So the terminology that determines whether something is a swing trade is that it's more than a day. More than one day becomes a swing trade. Okay? And especially if it is swinging between a high and a low point, which I'll get to in a second. I'll show you a couple of examples, and then it'll kind of make sense to you. Okay, so this is obviously not the full methodology that I go through with the mentees on the mentorship course. We go a lot deeper, but I want to give you the basics so you can actually understand the mechanics. Okay, for a swing trade, what you're really concentrating on is the direction of price. Okay, you don't really care much about the price action. You care about the direction of the price. Is it going up or is it going down? That is what is important here. Okay, so when you know if it's going up or down, you need a confirmation with volume and momentum, as well as validation of support and resistance. Okay, then your swing trade is valid. All right, so what would be considered a swing trade? Okay, let's have a look here. So just going off this watch list here, we'll have a look at maybe Disney and see. I think this was a valid swing trade, maybe. So no, this is not a valid swing trade. Let's look at Baba. No, Baba is not. I think that was one that was on a bigger time frame. Twitter. Okay. Not a very good one either. Let's find one better one. Okay, so here is a swing trade candidate. Okay. So you can see here's an example of a swing trade candidate. Okay, Beyond Meat, right? Look at Beyond Meat right now. Okay, the technicals are showing a very elongated downtrend, right? The stock has been making lower highs, right, and then lower lows, right? But then has started to consolidate in a descending wedge. You can see that, right? The price action is squeezing into this little zone over here, right? Eventually, what's going to happen is Beyond Meat is going to break out above or break below, okay? And when that happens, that's going to cause one of two things. Either a buy up or it's going to cause a sell-off, okay? And so in this kind of a situation, you need to look at one specific thing. We are sitting on a very strong support level, right? So now this is hypothetically speaking. We're sitting on a support level, and above us we have a resistance level. So therefore, this is the swing high, and we are at the swing low, right? So what we're looking at here is for Beyond to break up and test the high. This now qualifies Beyond as a potential swing candidate. Now, the next question becomes, well, how do you know how long this is going to take? That is the golden question. Because the first thing you do is you analyze, oh, okay, this is a swing trade. But now the second thing is, how do you know how long this is going to take to get up there, right? It could take a day, it could take 2 days. By the way, I do all my analysis for swings on a 1 hour chart, okay? A 1 hour chart. I like the 1 hour chart because it gives you the medium term price action. The 4 hour to daily will give you the long-term price action, and these over here will give you the short-term price action. The 1 hour gives you the medium-term price action, which allows me to perfectly and accurately ascertain what is the medium-term price movement. Okay. Remember, what do we concentrate on? We're concentrating on the direction. We're not concentrating on anything else. So, what would make a confirmation for this trend? Well, the first thing we need to see is Beyond make a wave up and a wave down and a wave up and a wave down, right? We can see there's a bottom here. It made a wave up, it made a wave down, right? That's the first wave. If we see another wave up and another wave down, and this is also higher, what do we now know? That this is making higher highs and higher lows. This now qualifies this to be in a bullish trend. Okay? Now that you establish that something's in a bullish trend, you can take the swing trade. Majority of people try to catch the bottom and they buy calls right here, thinking that this is a confirmation. This is not yet a confirmation until you get another wave showing another high. You need 2 waves of consecutive higher highs and higher lows. Okay? Then you can confirm a trend is established. Okay, so now you confirm that. Now what is the next step? How do you choose your strike expiry? How do you choose the contract expiration date, right? All that. Okay, well, for me, over a long period of time doing this and swing trading for a long time, I have figured out that for a swing trade, the best time frame, okay, the best time frame is to use contracts that expire 50 to 80 days out. Now, you do not know how long Beyond's going to take to get there, but you do know it's going to take about a month. And so having a contract between 50 to 80 days out, and I've mentioned this many times before on the live stream before, this gives you a good blend of Greeks. Okay? And as we all know, the Greeks are super important. Okay? And when I say good blend of Greeks, what I mean is gives you a good delta to price ratio. Theta is relatively low. Gamma is relatively low. And IV is at a acceptable level. Okay? You want to aim for IVs that are between 30 to 50%. And you want theta to be negligible and delta to be... Now, the delta is going to depend on your strike, right? So how do you pick the strike? Now you have the expiry 50 to 80 days out. How do you pick the strike? Well, your swing high is expected to be at 142. So do you go ahead and just buy a 142 strike? Well, you could. But remember that everybody else is going to be buying the strike. Every other trader who has access to this chart is not blind. They can see what's going on. In fact, more than the other traders and retail traders, forget about those people. Think about the market makers and the algorithms. Okay? they know that this is the resistance. All right. So you should always go 1 to 2 strikes below the resistance and take a slightly closer to money strike. What this does is gives you a good delta to price ratio, and it also allows you to get out before everybody else. So now what you will do is enter, once you have a confirmation and you enter, let's say you choose a 140 or 139 strike, you will ride the trade up to 138, and that's where you will start to move. Well, you're going to be moving your stop loss up all the way, right? Initially, you'll have a stop loss set down here, right? And then the price action moves up, right? And then you're going to move your stop loss up to break even, right? And then you'll move your stop loss up again to lock in more profits, right? SL1, SL2, right? And then you finally, what you'll do is you'll move your stop loss up for the third time and leave it there, right? And then let the stop loss do the work for you, right? If it goes up to 140, 142, move your stop loss up one last time, SL4, and that's the last time you set your stop loss. What happens? Price action goes up, comes down, hits your stop loss, and now you've made the max possible profit on this trade. All right? That is the methodology you should be using for your planning. Now, obviously, there are other things that goes into this. You need to do a risk and reward analysis. If you want to learn more about that, you got to join the mentorship course. I will be releasing more details about the mentorship course this week. Today, in fact, slightly after market opens, I'll be putting that information out on the Instagram page. Watch out for that. And that's really pretty much a good summary of how you can have a efficient swing trade. Okay. If you liked this webinar, smash the like button and tell me in the comments, did this help you? Let me know. What do you think? I want to hear from you guys and know if these things are helping you. Okay. Cool. Anyone take XLI? Yeah, we were talking about XLI, and that was a really good trade, to be honest. T, thoughts on writing puts on FMCI. I had a short squeeze yesterday. Should be merging with Tattoo to Chief in mid-October. Can you check Roku for swings? Let's see Roku. Yeah, Roku is also a potential swing play, right? This is also a potential swing play. But remember, once again, you have the wave up, you have a consolidation phase, you need a breakout, okay? And then after the breakout, it's not enough that you take the trade here. Remember, you can't take the trade here. You need the breakout, the pullback, the bounce, confirmation, and then the play to the top. Many people try to catch this point here as the bottom and then end up with this scenario, okay? Because the overall trend is bearish, you try to convince yourself that this is the play without a confirmation. You need the breakout, the bounce to confirm 2 waves, at least 2 waves, okay? Then you can take it. All right, cool. Do you recommend a trailing stop loss? No, I do not recommend a trailing stop loss. This is not a strategy that you should use a trailing stop loss for. Trailing stop losses are for scalps and for day trades. You should set a stop limit order and move it up gradually. That's the better play. Thank you. Yes, great help. What happened to XOM? Okay, so getting into XOM here just a little bit before I head out from the stream in a little bit, because I want to keep these streams as short as possible. So I made a little post about this on the Discord yesterday. Okay, for everyone asking me about XOM, freaking out, I said I would love for XOM to sell off even more, okay, so that I can buy more at discounts. Being an investor means you have to be fearless when you understand the backbone of the business, okay? Imagine if Warren Buffett had a business and he read, oh, my goodness, XOM is going to be taken out of the Dow Jones. I'm going to sell all my stocks. No, it doesn't work that way. First of all, you need to understand what happens when a stock is taken out of the Dow Jones. It doesn't mean it's delisted, okay? It's still there. It's just that it doesn't have, they want to replace the Dow with another sector, okay? And I go on to explain that here. So I said the stock is undervalued, as we have gone through on our live stream, right? So there's no reason for you to start freaking out, okay? You know the company is solid, right? And it has a competitive moat as well, right? Remember, it has that, it does chemicals, not just petrochemicals and all that. Remember, it's a plastic maker. It does a lot of things, right? And then DJI has been, which is the Dow Jones Industrial Average, has been out of sync with the rest of the indexes for a while. And I've been mentioning this for a very long time, that the Dow has to catch up. And hence, they have now replaced everything energy with tech, cloud tech. Don't you think that's a coincidence? Now, this sets the path forward for DJI to catch up with the rest of the indices, which would make sense since it's supposed to track the 30 most strongest market leaders, blue chip companies, and energy has been underperforming and will continue to underperform. We are making a bet on energy because we realize that it will be too late to get in when, and you will not get a good price when it rebounds, okay? So, please take a moment to realize that if you panicked upon reading the news, that's exactly what it's meant to do, make you panic and sell in fear. Of course, I'm not saying that XOM is going to moon. All I'm saying is that believe in your investment thesis and you should stick by it and trust your own analysis instead of somebody else's. And I even went on to say things to consider. My investment thesis about a company doesn't change. If your car gets taken out of a car dealership marketplace, does it lose true value? Does the car value get lower just because it has been taken out of the dealership? No, it doesn't, right? And if you keep looking at somebody else's cards to play in order to play your game, do you think you will ever win? Imagine doing that. For instance, it's only going to lead to more fear and anxiety because you do not know what you are doing, okay? And hence, I'm prepared to average down on XOM in the future if required. Not necessarily if XOM moves below 39, we're out. I've said this before, right? So if XOM moves below $39, we will cut this position, right? But for right now, we'll see if it can make a rebound, okay? We'll see. We got to see what happens. And it doesn't mean that I'm going to commit it till death. All I'm saying is we will reevaluate it and reestablish the investment thesis as this develops. But for right now, you got to view it differently from everybody else, okay? So that's, a primarily the thing that you got to take note of, okay? Great info, great content. Thank you guys. Appreciate it. Yo, thanks. You are very helpful. I've learned a lot from you. Thank you, Carlos. Appreciate it. Should we put a stop on XLI or let it ride or allow Dow Jones to catch up? Well, it depends on what kind of horizon you have on your trade, right? In fact, we remember what I just said. I was like, hey, guys, it's time to buy XLI again. Look what happened, right? I unfortunately didn't get into this. I was a little busy yesterday, but definitely was a great play, right? This was a perfect swing, to be honest. Perfect swing, right? So, this was one of those things that, we should have played. It was easy money, right? And thanks for that Alibaba call yesterday. We riding with you. Awesome, awesome. Boeing looks like the trend is turning around. Think about going long with some contracts a few months out. What do you think? Corey, we've been in this trade for a long time as people who are on the stream. So definitely gotta, you definitely gotta realize that Boeing now is, in a phase where it's accumulating. So I would say don't try to chase it. Wait for a corrective wave and then get in. The majority of the problem with you guys is you don't believe something until it happens. So the problem is that you keep buying when something is rallying. You keep buying here. And when it's selling off, you're like, nah, this thing's not gonna, it's not gonna turn around. This is when you should have bought, right? When everybody is going for and selling their shares, that is when you pick up the shares at a cheap price, or contracts, right? And I even said, I said, this is a key zone, This was a key demand zone. I've said it so many times, okay? The dip here was a pristine moment to buy the dip, okay? And remember, look, look what happened, okay? Look what happened. Wave up, wave up, wave down, wave up, wave down, right? And then it came down and then wave up, wave down. And now it's starting to reverse here. So wave up, wave down. We'll see one more wave and then another wave down. So you will get an opportunity to buy the dip, but you just got to be patient, right? You got to be patient, okay? Don't FOMO into things, guys. Like, don't FOMO. It doesn't make sense, okay? Could you show us how to properly set up stop loss in Thinkorswim? I have an infographic about this on my Instagram. Please go to Everyday Growth Advisors on Instagram and go check out this infographic right here. How to set a stop loss on Thinkorswim. Here you go. All done for you, man. Oops. This one right here. If you go through it, I've done a nice little infographic for you guys. So please have a look at it, okay? We got you guys. Good refresher, even after attending the EGA course. Intel also looking it may be ready to pop out for a swing soon. Let's have a look. In fact, I haven't been following Intel. Yes, absolutely. This one's another one. This looks like another good swing. And you can see it's kind of consolidating, right? This is a good one, actually, if you think about it. This one's kind of consolidating, right? It has been consolidating for a while. Okay. So, yeah, absolutely. And this one's a rising wedge. I don't know if you can see it, but this is a rising wedge. Kind of like this. You can see that, right? So wait for but remember, for Intel, what we really want to wait for, the reason why I'm not in Intel yet is because I want to wait for a pop above this level, right? I want to wait for a pop above this level. I want to wait for a clear wave up, wave down pattern, right? Wave up, wave down, wave up, wave down, above the $50 level, consolidation above this resistance, and then I'd be inclined to play this to the upside, okay? So if something is not at the level that you want to buy it, you simply move on to the next trade. You wait and you wait and you wait because you are a patient trader. You are not a person who's going to chase, okay? Thank you, you're welcome. Very thankful. Very helpful, thank you. No problem, Kabir, appreciate you. Can you look at Roku for a swing, please? Explain those. I just did. I just explained Roku. Literally just explained it. How do you determine to go long or short after finding stocks consolidating? Well, it has to consolidate above the resistance. And then there has to be a volume push-up. So let's say Intel comes up above here. It has to come down and validate this as a support. This resistance now has to become a support. And then it goes up, comes down, and then on the second wave, that's when I'll enter. Wave up, wave down, wave up, wave down, higher, higher. It has to go higher. This is where I will enter. Okay, that's how you confirm and validate. You're not going to try and chase it, and you're not going to try and speculate. You're going to always wait for a confirmation and then enter. Never try to catch the whole wave. Always try to catch a part of it, and you rather have a 90% success rate 100 times than have a 10% success rate one time. Correct or wrong? Does this make sense or not to you guys, right? You want to be 90% succeeding 100 times and make 5% each time, rather than be one time right and make 100%. Okay? It just makes sense. All right? Stop trying to hit it big. That's what I'm saying. The greed will kill you, man. Good luck with your trades today, everyone. Stick to the plan. Prosper with humility. Absolutely, man. Humility, that's such an important word in trading. By the way, guys, if you like the stream, I really, really, really hope that you could smash the like button. This I only ask for that. Like, if we can get to 100 likes, that would be really nice. I appreciate you guys being here, by the way. So thank you for being here. Okay, hey T, how do you get your Zoom screen to see everything? What do you mean? You just scroll out and in, like, or you can even hold this down and do that. I mean, I'm not sure what the question is. Can you check Zoom or PayPal? I'm not gonna check it if you unless you tell me exactly what to do, or what exactly you're asking me to check for. What indicators do you use in your charts? Love the content. Joe, I have an indicator setup. Maybe I'll also upload the indicator setup to the Dropbox here. Remember, I have these pin posts here. A free intrinsic value calculator. If you go to my Twitter, you'll find it there. Maybe I'll upload the indicator here as well so that you guys can have a look at it. So I'll do that sometime today. Okay then. Awesome. I'm going to end the stream right here. Tomorrow we'll be doing Fundamental Wednesday, remember, with Baba. We'll be calculating its intrinsic valuation. I'll be using this Excel sheet. So actually what you want to do, if you really want to practice and you want to do something ahead of time and come prepared for the live stream tomorrow, you should go ahead and download this and then go practice on your own the valuation of Baba, right? Use one of the videos from last week on Wednesday on how I did the other ticker, and then use this calculator and try and figure it out. And then when you come to the stream, you will see that whether you're right or wrong or how off you were with your assumptions, and we can go over it together to validate it. And I think that will be much more accurate than us, just relying on one person. So the more people who do it, the more assumptions you have, the more you're doing these kinds of things, you gain more exposure. Okay, so alrighty then. Thank you very much. If we can get to 100 likes, that would be cool. But if not, I'm okay with it. And yeah. Thanks, Steve, for doing these webinars, cuts to learning, even taking both courses. Like a viewer said above, it is really a nice refresher. Absolutely, Daniel. These refreshers will always be available. And remember, this week we're going to do swing trading and position trading. So Thursday will be position trading. It's a completely different type of trading system. And then next week, we'll get some ideas on Thursday on what you guys want to see next week. But I have a couple ideas. So tomorrow, turn up for the webinar, for the live stream. It's going to be fundamental analysis, and then Thursday, position trading. Friday, we'll do a recap, and yeah, that should end the week there. Choose a new ticker on Friday and keep the stream going. We'll just, keep the ball rolling, guys. So I hope you guys have a great day. Remember, don't overextend. Buy hedges. I would say sell your bullish positions. Get out of them. Take your profits. For God's sakes, don't be greedy. Take your profits off the table. Wait for the pullback. Buy in again at the bottom. Rise on the next wave, right? And how do you know where's the bottom? How do you know where's the bottom, right? Well, you're going to see one of these, and then you'll see this, 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 right? And then you'll see this, and then you'll see this, and then you'll see this, and this, and then this, and then this, and then once you have a confirmation of making higher highs again, then you ride the next wave up. You don't try to catch the bottom. Do not try to catch this. You don't know how far it can go. It can go like this, and like this, and like this, and like this. You never try to catch it. What do? You go and trade with the trend. If something is bearish, then you take puts. If something is bullish, then you take calls, right? There are three basic patterns: downtrend, sideways, and uptrend. Follow the waves and you will never have a problem. The trend is your friend. May the force be with you. Have a good trading day, guys, and I'll see you tomorrow for tomorrow's live stream. Have a good one, guys. Intrinsic value calculator is on my Twitter. Go follow me, EGA Learn, at EGA Learn, at EGA Learn, at EGA Learn. Boom. Have a good one, guys. Peace out.